You can imagine when the company issues, if we were to sell $1 billion of equity in the market and it's backed by 500 million of Bitcoin at 100% premium, then we buy the Bitcoin and 3 days later, we've generated a $500 million gain for our shareholders in Bitcoin. So that's very interesting. That generates what we call a BTC yield. Now, if we do the same thing with a bond, a $1 billion convertible bond, we don't do it at 100% premium. It might be a 200% premium because the bond comes at a premium to the stock. So when you go up 40% over a stock, which is 100%, now you're looking at something that looks like more like 180%. So now a $1 billion bond sold into the market's backed by $350 million of Bitcoin. We buy back the billion of Bitcoin. We capture the $650 million gain, another BTC yield. So the real operating business of the company isn't the software business anymore. I mean, that's still there. It generates $75 million in cash flow. But one of those bonds would generate 10 years worth of earnings in 5 days. And so really MicroStrategy is pioneering a new market. Our investors are Bitcoiners, right? So if you're a Bitcoiner, what do you think? You think Bitcoin's going to go up forever with some volatility. So what do you want? You want more Bitcoin per share. So how do you know whether the company is succeeding that's giving you Bitcoin per share? Well, we do the deal. We announce BTC yield. This is how your Bitcoin per share are accreted. How long does it take? It takes a few days. So the real MicroStrategy business is to be the leading public issuer of securities in order to acquire Bitcoin. And as we acquire the Bitcoin, we're driving up the scarcity of the Bitcoin. We've now bought more than 1% of the Bitcoin. Now, there's only 450 Bitcoin available for sale from every day by natural sellers, the miners. You know, so 450 times 67,000 of Bitcoin, it works out to 20 million and change. So you can see what happens is if we're raising capital via tapping into the public equity markets and the public fixed income markets, and we're bringing that cap $15 billion or $20 billion of open put interest. You know, when I was a younger man, when we first came public, you know, I was in my early 30s and if people shorted my stock, I would be like, they're shorting my stock. I don't like them.
But you still call them degenerates today, though.
No, that's a term I would reserve to people that are trading with so much leverage they might get wiped out on the weekend, but they do it for the thrills in lieu of going to Vegas. No, but when I was a younger man, I would have been concerned about people shorting my stock, but now I'm not because MicroStrategy is really just providing a set of institutional instruments that institutional investors can use to tailor a portfolio that's long, short, hedged. They can sell the volatility, they can arbitrage the volatility, they can arbitrage any instrument against any other instrument, they can generate yield, they can buy insurance. Some of those people that are short, they'll short $1 billion of MicroStrategy and they'll buy $1 billion. Have integrity and consistency and transparency because it's not my job to trade, hedge, arbitrage, or construct that portfolio. There are guys with hundreds of millions or billions of dollars in a Bloomberg, and that's what they do every day. So my contract with them is we're going to do what you can't do. We're going to buy Bitcoin, whole Bitcoin, and we're going to issue equity, and we're going to issue debt instruments, and you can't do that. We're a public company and on the NASDAQ stock exchange in America with a nearly 30-year track record. And we have 16 billion of permanent capital. That's Bitcoin, right? So I can create an equity with 80 or 90 vol. I can have permanent capital. We can stand massive swings because of our capital structure. That's what we can do. What you can do is decide if you want to buy it, sell it, hedge it,
or short it.
Short it.
So let's talk about MicroStrategy's rise then. In the past few days, it hit 43 billion.
I sell $1 billion bond here that gives you this percentage and this low volatility. And I invest the money into this, which is high performance, high volatility. And so what MicroStrategy does is we're scraping or stepping down the volatility, and we're stepping down the performance. Now you would think, why would you want 10% instead of 50%? I mean, like, why would you want that? Well, MicroStrategy's gotten 50% every year for the past 4 years, but we took 50% vol, right? The world's full of people that would rather have 5% and 5 vol, or 10% and 10 vol, or 15% and 15 vol. So in essence, MicroStrategy's opportunity is to be that leading public company in securitizing this asset class and then providing the derivatives, fixed income, high yield, convertibles, or billions of equity into the market with a permanent capital base that's going to oscillate. It's going to vibrate with the frequency of Bitcoin, right? That is, I'd love to say we had the idea 4 years ago and that's what we were trying to do. No, we just kind of stumbled onto just a really great business.
I do want to get to Apple and how you perhaps plan to convince companies like that to follow your Bitcoin adoption strategy playbook. But this whole conversion, financial engineering type strategy is often referred to online as the infinite money glitch. But I wonder if it is infinite or not. And if it's not, do you perhaps see it running into more of a supply issue first or a demand issue first? Demand being perhaps there might not be potential buyers of all of those other options like bonds, or supply that if you create too many shares and can make too many conversions from your stock, that existing investors will be diluted too much that you'd then run into a sort of cap with that. Or can this just keep going forever, Michael?
See, the misnomer there is it's not a money glitch. It is a digital $10 million. The dollar lost 99.9% of its value against real estate, waterfront property in Florida. Okay, is that a glitch? Right? And the peso lost 99.9% of its value against the dollar in 20 years. Is that a glitch? That's really just capital flowing from a weak asset to a middling asset to a stronger asset. And Bitcoin's advance is capital flowing from 20th century analog assets, financial and physical assets, to the 21st century digital economy. And it's going to go fast early on. It went really fast the first decade. It's been going 50% a year ARR for the past 4 years. But as the 1 trillion equalizes with the 400 trillion, and this becomes 200, when this becomes probably this 450 trillion will become 700 trillion, but this 1 trillion will become 100 trillion. And so as this becomes a fraction of the 20th century economy, the difference between the want is you want a well-balanced company where, it's like Harvard University or Yale. They're not valued based upon the earnings of this semester of freshmen entering Harvard. They're valued because they have 18 billion in the endowment. And if they close the university, they're still rich. They have 18 billion in the endowment. So MicroStrategy is just pioneering, it's kind of common sense. Your family wouldn't give away all your money and just say, we're going to work harder. And a university wouldn't give away all its money and say, we're going to raise tuition, cram the classes, cut the teacher's salary, and work harder. But conventional wisdom in finance is, your company ought to dividend out its capital. It ought to buy back its stock. It shouldn't actually hold any capital on the balance sheet. And it should just raise its prices and tell its employees to work harder and cut its cost. And that, in a nutshell, is why 99% of the companies in the world underperform the Magnificent Seven, and why they all could benefit by just adopting Bitcoin as their treasury reserves.